Hey there, welcome to the Guaranteed Retirement Guy Show. My name's John, and we're going to be talking about how to determine if an annuity is right for you. So annuities sometimes are good for us and sometimes maybe not so good for us, just depending on what we're looking for. Some people just hate annuities, okay? If you're a Dave Ramsey fan, you probably heard him many times say annuities are horrible. You should never do it, ever, even think about it. And then, he refers you to mutual funds only because that's his plan for everyone. And regardless of your risk tolerance, which unfortunately benefits him because he gets paid by all these advisors. Okay. You got other guys that are on the internet, that are also pushing, for assets under management because they want to charge you a fee. They want to, that is their model, and they hate annuities and they always tell you how horrible they are. And unfortunately, you have so many voices out there doing that because it hurts their own business model. And it's not necessarily great for the client, but that's what's good for them. And that's what they do. And then, of course, there's just some people that have so much money where they're like, I don't need an annuity because I'm independently wealthy. That's fine too. But you've got people like Shaquille O'Neal, who's worth like $500 million, and he invested millions into annuities. So he's considered very smart in his business practices, and he still set up guaranteed income for himself. So it just depends on if you want guarantees in your portfolio or not. Babe Ruth, he did the same thing. And he lost everything in the 1929 stock market crash. But because he had annuity contracts in place, he was okay. So there's a lot of value that comes with contractual guarantees. So you have to determine for yourself. I can't do it for you. No one else can do it for you. Your advisor might tell you what they think, and they're going to give you their advice. But in the end, you have to live with your decision. You have to determine if it's best for you and your given situation. Okay. So for me, in my situation, I love stocks and bonds. Actually, I don't like bonds. I like stocks. I purchase stocks, and that's all I ever purchase. Okay. Because I love risk. But you know what? I guess I do like bonds because I also like annuities, and I have those for my portfolio as well. And a lot of these annuities are backed by bonds. Okay. So when you have interest rate environment that's very good and you got high interest rates, the investments that back these annuity contracts will actually provide you a lot of lifetime income. Anyways, if you're looking for guarantees, then I would highly recommend that you look at annuities for that reason. So you can go to my website, johnstevenson.com. You will go to my calculators, and you can see whatever the income payouts are. The income rider typically pays out the highest, so you can start there if you like. And it will show you highest lifetime income, and you can just put in your age, and if you want to do joint income, if you're married, put that in there as well, and it'll show you all the highest payouts. If you want to book a call with me after that, there is a link on my website that will allow you to do that. So I always tell people, check things out for yourself first before booking a call, because I want you to feel comfortable doing that, knowing that you're not going to book a call with someone that they're going to try to push one product, two products, three products, or whatever. You're already going to know what's available, okay? You already know what the highest payouts are. So that's what's so nice about that. There's full transparency. So unfortunately, a lot of times, if you are looking for an annuity and your advisor's like, well, there is this annuity with Allianz or F&G or Athene or whichever, and this is great for you. Maybe it is, maybe it isn't. But most often, I have found that it is not the best option that advisors are trying to push on their clients. And they will sell it to their clients because their clients trust them and they've been with them for a long time. And the annuities are probably decent. But there are a lot of higher paying ones out there. And if you knew there was an annuity out there that paid you the most and paid you like $10,000 or $15,000 more than what your current advisor is showing you, wouldn't you want to know about it? I certainly would. And so that's why I show everything there. So anyways, so I wanted to kind of show you what this looks like. Okay, I want to share my screen, and then you can kind of decide for yourself how this would look for yourself. So you'll notice here, I've got someone who is 58. They're in North Dakota. They're married. They've got a spouse who's 57, and they want to take income in 7 years from now because they're going to retire at 65. Okay, they want joint income that never runs out, and they've got $600,000 to put into this. So maybe they're taking out of an IRA or a 401k, or even just a non-qualified account. Maybe it's just a brokerage account. And they're just looking to get out of the market, and they want to, or at least get a portion out of the market, and they want to set aside some guarantees for themselves so that if the market goes sour, they're still going to be okay. All right. And so this, again, you have to determine if this is right for you in your situation. Maybe it's not. Maybe you got $50 million and you're good with having 100% of it into risk. I mean, even with $50 million, it might make sense to put $5 million into annuities that pay you a huge payout. And then you can play with the rest and be as aggressive as you want to. And you don't care because you got annuity contracts in place. So anyways, it's totally up to you, but just some of my thoughts on that. All right, so looking at this, $600,000. Here's the payouts. You got Clear Spring, highest, followed by Delaware, Corebridge, Aspida, Nationwide. Okay, and then you got all the rest of the carriers here. So, and in this specific situation, if it's 7 years deferral, you're going to get $70,000 per year guaranteed for the rest of your life. Okay, this is awesome. This is a joint payout, by the way. So joint payout means it's as long as both spouses are living. So you might die after 30 years, your spouse lives 40 years, okay? And you can see if I look at the account value, it's going to run out by the time you're like 79, 80. And you can see this is with index growth. The index growth, all it affects is the account balance and the death benefit. That's it. So the death benefit is your account balance. But the income, that is contractual. That is why you have an income rider attached, because that is for lifetime income. And you'll notice that continues for the rest of your life. That is what's guaranteed. Okay. And in this instance, you just basically took $600,000 and bought it a roughly $2.2 million pension. That's what you did. So it's very simple. It's a great way to turn money into pension. And you might decide, well, you know what? I want more than this. And I'm not going to retire at 65. Okay. I'm going to retire at 67. Okay. What does this look like if I defer out 9 years? Well, you could definitely have an advantage there. There you go, 84 grand. So $84,000, that's not bad. So if you're looking for high lifetime income and you allow your money to sit there and defer for longer periods of time, you can see it's even higher. Okay, you might think, well, what if I want to wait till 70? Okay, I'm not going to take my Social Security till then. I'm going to work till then. I want to wait till 70. How much will 600 grand give me then? So it was 110,000. Okay, you can see Nationwide's starting to get up there. The New Heights Select product's pretty good. Just depends on the state and depends on the deferral period. But if you look here, 110,000 between Clear Spring. And you can always split it up. Let's say you say, well, I want to put 300 grand in one, 300 grand in the other, spread out my risk. Fine. Then your average income will be the combination of these. So roughly what, $106,000 if you were to do that. So that's a nice way to do that. Some people will split up larger portions. You don't have to, but that's a nice way to do it to kind of spread out your risk a little bit. Because these are backed by insurance companies, and I like A-rated companies because they have high reserves, and if they've been around a long time, that also helps too. So, but I show everything, okay? Regardless of what I'm getting paid, I want to make sure that you see everything so that you can choose for yourself. But that's the question now you have to answer for yourself. Is an annuity right for your situation? Are you looking for guarantees as part of your portfolio? Okay. Does that give you peace of mind? Maybe it doesn't. Maybe you don't care. Maybe you just can't stand the thought of being out of stocks. That's fine. If you can't stand that thought of being out of stocks, then don't buy an annuity. Okay. Keep your money in there and keep investing. What annuities are used for is they're for contractual income. They're for pensions. People buy these all the time to provide lifetime income payouts for themselves. And it's a great way to provide for yourself and if you're married, for your spouse without having to dive into your other investments. So anyways, if you want to chat more, if you're thinking this might be something that you'd really like for your portfolio or at least a part of it, then book a call. There's a link below this video and there's a link on my website, johnstevenson.com. But before you book with me, you can always check out my calculators and find out for yourself exactly what the highest payouts are. And I'll be happy to answer your questions. I'd love to help you purchase one if that's what you're looking to do. And again, if you like the video, make sure you like, subscribe, share, comment below. I'll be happy to answer. Appreciate you, and we'll see you next time.